Let's start with the equity markets. It seems that equity is really battling in light of the tightening interest rate regime. What is your reading of the low level of activity that we're seeing at this point?
As you said, there is the fact that interest rates are really high. And whenever interest rates are high, the opportunity cost of equity investments is high. And that is what is affecting equity performance. Fund managers are staying out because fund managers are getting three-month treasury bills at 16%. And when you can get that, then the argument for an equity investment is weak at best. And that is really what is affecting equity performance. And there's also the fact that the Eurozone issues and the American fiscal issues are also affecting foreign investor sentiment. And that's really what is affecting equity performance around the world and not only in Kenya.
So, Samora, in light of all these concerns, all the uncertainty, as you say, specifically around what's going to happen in the Eurozone, how are you positioning your portfolio? I mean, what are you doing with your money as you go into 2012? Are there stocks that are offering value for you from a longer term perspective?
Indeed, there are some stocks that are offering investors good value. I think Uchumi at selling at a P of just around 5.5. I think that's a good long-term stock. They're expanding into East Africa, and as you know, the retail market in East Africa is booming. The East Africa community is very strong, with a population of around 134 million people. And I think if you can get exposure to that market, then it's a good thing going forward. They have to sort out some issues with regards to their chairman, the non-executive chairman. But I think once they do that, then I think it's a good counter to hold. And as you saw, Jubilee is performing well. And the good thing about Jubilee, unlike other insurers, is that they're not so much invested into equities market. And therefore, their earnings are not as volatile as a result of equity volatility. And that's a good stock to hold.
We were talking about
it's just fixed income.
Yeah, we were talking about the insurance sector yesterday, and interesting that, you know, Pan-Africa Insurance has been selling off given its exposure to the stock market. Just in your perspective, are we likely to see a lot of M&A activity going forward in consolidation, given the high number of insurers that we see in Kenya at this point?
I think it's necessary for the strengthening of the insurance industry, and not only the insurance industry, but also the banking industry. Our financial sector is very concentrated, and I think that is a problem in terms of returns on equity. And I think in the insurance industry, we'll have to see some consolidation, because what we're seeing is a lot of premium competition that is affecting profitability and also solvency for the insurers. So going forward, it is necessary to see some consolidation in that sector. We
saw Kenyan Airways firming up for a second straight day yesterday. It's receiving some support at this point in time, but it is one of the stocks that is sitting at the bottom of the losers board for 2011. Is there an investment case for a KQ with all the uncertainty over this upcoming capital raising?
Okay, I think with KQ, people are not only looking at the capital raising, but there's also an eye on 2012 and Europe. You remember last time the world went into a recession, the Eurozone went into a recession, KQ and global aviation really suffered. And that is what's affecting investors at the moment, as well as the prospect of the rights issue. Fundamentally, KQ is a very strong company. It benefits from some geographical advantages, as Nairobi is a natural hub for a lot of connection into India and China, which is a growing market for aviation. But I think there is the fact that the capital raising and investors looking at dilution, as well as the global economy in 2012 and the uncertainty surrounding that.
There also seems to be some outrage by KQ employees over their move into the low-cost airline space. They want to open up Jumbo Jet next year. What are your thoughts on this move from KQ's perspective?
Okay, the thing with the Jumbo Jet is that it's going to be a subsidiary of KQ. It's going to be a totally different operating company. And I think KQ staff on the whole don't have much to be concerned about with regards to Jumbo Jet. But the thing is that KQ are doing this because local aviation is rising. And I think to get a foothold into that sector, they need a different operating subsidiary, because as management suggests, it's very hard to run a global airline and run a low-cost airline at the same time. So you'd rather set up a subsidiary to handle low-cost flights and concentrate on your bread and butter, that is the global aviation.
So it could provide somewhat of a buffer for KQ in light of all the concerns around the developed world?
Not necessarily. I don't think the revenues that they will generate from Jumbo Jet will be enough to offset any declines from global growth, at least not for the moment, but going forward, indeed, it could be a buffer.
We're talking about stocks that have been hard hit in 2011. Access Kenya is one of those, losing around 2/3 of its value, just above 5 shillings at this point. Now, the MD, Jonathan Soman, has said they want to move away from their heavy corporate image. They're looking to rebrand next year, a heavy drive to target the youth. But overall, I mean, Access Kenya has been heavily punished. Is there a future for Access Kenya in light of the increasing competition in the telecom space?
I think it depends on how they execute strategy going forward. In the corporate sector, they've had a stronghold, having a market share of around 40%. But as you've witnessed, companies like Safaricom have introduced concepts such as cloud computing, and they're rolling out their own proprietary fiber network. And that could be an issue for the corporate segment, which is Safaricom is heavily invested in. In the homes market, there's a lot of competition. There are other players such as Wananchi, Jamii Telecom. And I think going forward, it depends on how they execute on strategy. But industry-wide, returns on equity are not expected to be attractive going forward due to the immense competition.
So not a stock that you'd have on your portfolio, given all the concerns around this competition?
Not necessarily. Probably a speculative one because of the prospect of a buyout. But from a fundamental perspective, not necessarily.
Let's move on to the currency and upcoming MPC. The MPC has now raised the inflation target to 9% for the next full year. That's from 5%. Yeah. What implications do you see this having for monetary policy?
I think one thing is that an inflation target of 5% amidst the current global commodity prices is a bit unrealistic. And I think they've adjusted that going forward. Secondly, if you set your inflation target at 9%, then it means that you've got more room to be accommodative in 2012 when the global economy is expected to suffer. So I think they're having an eye on, first, one thing being accommodative, and secondly, gaining credibility within the market, because the CBK has lost a lot of credibility this year. So when you set an inflation target for 9%, you're looking at both credibility and flexibility in terms of turning accommodative next year.
Yeah, as you say, and at this point in time with the tight interest rate environment, liquidity, the liquidity crunch is really starting to have an impact on the economy. We've seen that with the shilling gaining below that 90 level yesterday. Does this beg the question that they perhaps were a little bit too aggressive in their last interest rate hike?
Not necessarily. They weren't, okay, indeed they were aggressive. But the thing is that they needed to do it, or the results are clear. But at the moment, with regards to the currency, you're never too sure whether it's just tightening, because we witnessed the markets being tight sometime in August, and interbank rates were the rates they are at around 25%, 26%, and we didn't see any strengthening of the shilling. But come now, what is happening is that traders at the banking traders are looking at inflows from the tea sector, the coffee sector, as well as the tourism sector, and that is what's supporting the shilling. So, in as much as tightening has helped the shilling, there's also the concept of the balance of payment side when inflows are coming from abroad. So, I think with regards to tightening, it has helped, but you never know whether it's the key factor that is helping the shilling. And it might be necessary to ease up next year when growth is in jeopardy.